When it comes to dividend investing, there are multiple ways we can go about this. We can go with high yield dividend stocks, low yield dividend stocks, or my favorite, large cap dividend stocks. Large cap companies are companies listed on the stock market with a market capitalization of over $10 billion. When you think of large companies, you think of companies like Apple, Microsoft, Pepsi, and others that are well-known household names. The great thing about these companies is their stability and the fact that they can pay a consistent, growing dividend. Stick around, because in this video we will go over how to identify these large cap dividend stocks, where to find their dividend yield, and how I am going about investing in large cap dividend stocks. Now before we get started, be sure to hit that like button and subscribe. It's your favorite investor, and this is the channel to help keep you invested and build your wealth. So as we think about dividends, especially from large cap companies, there will normally not be an outstanding yield. A company like Pepsi pays 2.89%. So keep this in mind, as all large cap companies vary. You should also note that higher yields should be approached with caution, as often there is trouble under the hood. Large cap dividend stocks are usually seen as safer investments. Keep in mind that no investment is risk-free, but these do have a greater probability of performing well over the long run. When evaluating large cap dividend stocks, you want to screen for companies that have a history of paying dividends, increasing in capital appreciation, and have a market cap of over $10 billion. Information like this can be seen easily on your favorite stock news website. Personally, I like to use TradingView or Seeking Alpha to find this information. You can also use ETFs to your advantage. A quick Google search for large cap dividend ETF will show you ETFs that have these kinds of companies in their fund. You can see ETF holdings and begin pre-selecting companies that you would like to hold in your portfolio that fit the criteria. Once you have found companies that you like, you can now dive into the company and begin to research its growth and dividend history. Using the company Pepsi, we see an overall price growth of 10% year over year for the last 5 years. This is excellent and is more than likely to continue, give or take a few percentage points. Dividend growth over the last 5 years has been 6%, and they have consistently paid a dividend for the last 50 years. If I was a betting man, I would say this trend should continue into the next 50 years. This, of course, depends on management doing the right thing and Pepsi remaining in favor with consumers. Personally, in my long-term portfolio, I would much rather own a basket of ETFs that will be managed for me. The drawback of this are expense ratios that come with the ETFs and the risk of underperforming individual stocks that could have record years. But I'm okay with this. An ETF that I like to use for large cap dividends is SCHD, or Schwab's Dividend ETF. This fund has a tendency to grow capital at 10%, pay dividends at around 2.7%, and grow the dividend at around 10%. There's no wrong way to invest, really. It just depends on how much time and risk you can afford. SCHD is made up of over 100 companies, so if one fails, the fund will eventually just readjust to give that company a lower rating or holding in its ETF. When playing individual stocks, if that stock underperforms, then hopefully your portfolio is diversified through multiple large cap dividend investments so that it doesn't drag down the entire portfolio. Anyways, if you made it this far in the video, I hope you got some value from it, and be sure to check out thebestdividendcalculator.com to start putting together your plan to build wealth. As always, thank you for watching, and be sure to hit that like button and subscribe for more financial content. It's your favorite investor, and I'll catch you on the next one. Peace.